Hi, fellow traders. I hope you guys had a good week. I hope it was a hell of a lot better than my week. I'm going to share that with you here in a few. Also, once I get through the recap, I had a request from somebody to share how I find my stocks that I trade. So, at the end of the recap, I'm going to go into depth of my simple process of how I find the stocks that I trade every day. So those of you that are interested in that, that's going to come after I do this recap. But what I'm showing you, this picture here really depicts how I felt last week. And if you guys that are fans of the Die Hard series, you know this quote. You're the wrong person, you're the wrong guy at the wrong place at the wrong time. And that's how I felt last week. Pretty much every day last week, I felt like I was in the wrong place at the wrong time. I was trading the wrong stock at the wrong place at the wrong time. I go through, I build a pretty good watch list every day. But the hard part is executing it the right way. And, last week I just didn't do a very good job. The stocks were there, the opportunity was there. I know it was the market, the price action was a little tough. But the opportunity was there. And so I can't really complain about that. That I just missed it. And I missed it a couple days. And it happens. It's part of the process. So we're going to talk about that here in a minute. But, I kind of felt like Bruce Willis. I just hope I can kick ass like Bruce Willis next week, and fight my way out of that. Last night, I finally got a chance to watch this documentary on the GameStop debacle. It's streaming on Hulu. It's really, really good. But really the biggest question I had going into this thing, and the question that's loomed over me for the last couple of months, is how in the hell did people who had no idea how to trade stocks, no idea about anything in the market, no education, nothing, come in and make hundreds of thousands of dollars? And me, somebody that is kind of well educated in the market, well versed, have everything supposedly together, only make, between 80, I can't remember exactly how much, because it was between two accounts, but between $80,000 and $100,000 is all I could make. But these guys made $500,000, $600,000, $700,000, some over $1 million on this. Now, yeah, at the end, some of them got burned because of what Robinhood and the rest of these guys did. But the most part, the smart people, they saw this and they were taking money, along the way. But it was really good. But don't get turned off. If you haven't seen it, don't get turned off if you see Jordan Belfort on there, the Wolf of Wall Street, because he did a pretty good job as one of the commentators on here. He did a really good job explaining some stuff. But I'm like, who else would you get to talk about something like this other than the original guy himself? But I'm not gonna say a whole lot about it. It helped answer a question as to how that happened. And I know now that it can never happen again, because now that everybody knows what happened and how it happened, these big hedge funds and everybody, they've got plants and all of these social media things. So that explains now why they're so ahead of everything that's happening. And things have really tightened up for us retail traders in the last couple of months. But it just answered a lot of questions. So check it out if you haven't. It's on Hulu. Even if you don't have Hulu, get like a free 7-day subscription and watch it and cancel it. It's worth it. All right, so you can see what happened last week in the SPY. Practically traded sideways in this channel, which means price action was really, really tough. But it also meant I didn't get any swing trades off, which sucked because I was looking for this to pull back this week to really give me a springboard to try to catch some good swings. Day trading, the market's going to be there. I'm going to make money day trading, but I really, really want to get a couple swings off. And this month has just not been there. You can see the whole month, basically the whole month, we've been in this channel. The whole freaking month. And, you know, I guess I shouldn't have cut it off. I cut off some of my swings because I wanted to start the new quarter off fresh. And some of those swings I cut off ran up the first couple of days of April. And then we got into this and there's nothing. But, you know, we're going to talk more about that in the session in the morning. So, you members that, even if you're not in the swing trading, come in for the first part and check out the market analysis because it really will help you set your week up going into the day trading. But you can see where we are. Honestly, I want this to come in. I really, honestly and truly do, but it just doesn't look like it. The numbers that we're going to look at tomorrow, everything is going to tell you the bulls are still in charge, and we're trying to make a run toward this ascending resistance. And I'm not so sure that it's going to reject this time. I mean, from what I'm seeing so far, it looks like it's just going to blow through that and keep going. But at this point, we've got to be ready for anything. We have to be ready for anything. When the market gets up here like this, you got to be on your P's and Q's. You got to be on your toes. So that's what we're looking at going into next week. But you can see Friday what we dealt with. A really nice run up. A really nice run up on Friday. So Mattel, this was the first trade. I don't know what the hell happened here. I should never have taken this trade. Okay, I should have waited because anytime a stock that has a less than $1 ATR makes a move like this, it's not going anywhere unless it pulls back. It's not. I know this. But I think what got into my head, and I tried to not let it get into my head, and I tried to convince myself that it didn't get into my head. I knew I needed a strong Friday to keep me from having a red week. I knew it. And I think in the back of my mind, that got me taking some things that I know I shouldn't have taken. But look, if I had waited, there was a nice trade to the downside. You know, in between here, if I wanted to trade this size up, I could have even taken 1,000 shares on this and really worked it. But for some reason, I bought it here. I think it flashed above and pulled back, and I ended up buying it. And you can see what happened. It sold off, stopped me out, you know, and then it just kind of broke down and went the other way. Just, you know, wrong timing. If I had just waited, this thing would have come back, closed the gap, and, you know, I'd have been in some money. But totally messed that up. SQ, another malfunction here. I got in too late. I kind of missed it. I got in a little bit too late down here, and it bounced back on me, and it just recovered. It never did lose this level. It dipped below it. Now, had I caught it here, I would have been out. I would have been out 2/3 right here at 240.50. Would have picked up some cash, but it turned around and just wiped me out. So my Friday was done again before 10 o'clock. I had maxed out my loss before 10 o'clock. So, unfortunately, that was that. So, another $800 loss to go with the $800 loss on Thursday, which guaranteed me to have the worst week I've had in months. And I think I probably foretold it last week when I was talking about the equity curve and, I'm going to have a slowdown and all this. I was not expecting a week like this, especially with earnings kicking off hot and heavy. I just don't do bad when earnings are my thing. But it was all a product of me being in the wrong stock at the wrong place at the wrong time. That's all it was. There were stocks on my watch. All of these stocks moved. They gave opportunities. It was just a matter of executing. And my execution was garbage last week. Just plain garbage. So you can see this is where we ended up. Not good. I'm still green on the month. Barely. The only good thing is, if you go back and if we look at my red week in January, it was the third week in January. This was the first full week of earnings. I was red. So I ended up doing the same thing the third week, which is the third week in the quarter, which is the first full week of earnings. I did the same damn thing. All right. But then the next week, I had the best week out of the whole first quarter. So, or next to the best week. This might have been the best week. But, so that's got some, I've got some hope. I've got some confidence now. I felt pretty bad Friday. But when I was looking at this today and going through my numbers, I'm like, hey, I've got a habit of doing this the same week every quarter. So should have a strong bounce back. So that's what I'm looking forward to. Not really upset about that. All right. So that was my week. Again, down 1298.72. But I should have a really strong week. Should have a really strong week coming up if history will repeat itself. And I do what I'm supposed to do. All right, so now we're going to get into my simple way of finding stocks to trade. All right, this is, if you know me, I like to keep things simple, stupid. I don't like to overcomplicate things. My engineering teachers in school, when me and my students and I went to compete, we would whip people's ass. In the contest we had in class when I was in school, everything, I used to piss people off, my teachers, because I did things so simple. I knew early on, and my granddaddy taught me way back when I was elementary school, middle school. He's like, you always you can find a simple solution out. You don't have to overwork yourself, but you have to do the work to find it. There's always a way to do it. You just have to think. Now, my grandfather, I think I shared with you guys before, he was a nuclear physicist. He worked on the atomic bomb. He worked on the Manhattan Project, and he worked at the Savannah River nuclear site here until he retired. And he's got all these patents and stuff that he did, but he was really smart. And he taught me this stuff, to be simple. See, he's like, all these people try to portray themselves to be so smart and use all of these things. And he's like, I just blow them out of the water every time. And that's the way we work. Just did things simple. The less moving parts you have, the more reliable your component's going to be. And that was the theory. So everything I did was as simple as could be. Less moving parts, less to fail. And it works. And that's what I brought into my trading. So you guys, it's all about keeping it simple, stupid. I'm not going to blow you away using all these different terms, trying to find all of this stuff to try to make myself look good. That's not me. That is not me. So only 3 simple things we're going to look at today. How do we find these stocks to trade? This is a question I get a lot, the difference between a scanner and a screener. Some people say there's no difference. I'm an engineer. I'm really a stickler about this stuff, and there is a difference between the two. So I'm gonna show you that really quick, and then go through my simple process of finding stocks to trade my way. All right, so there are 7,600. Well, hold on. I'm not even sure right now. Let's find out. Simple way. We'll look on FinViz here and screener right now. So my data is off on this. 8,072 stocks available to trade. All right, so that's how many we've got now. 8,072. So let me change this real quick. I want my data to be correct. Wasn't it? It was 8,072, right? I want my data to be correct. Yep, 8,072 stocks. They're segregated by sectors and industries. This breaks them down into groups ranging from 125 stocks to 3,500 stocks in each sector. And then the industries further segregate them into smaller groupings. So the big question is, how do we find stocks to trade every day? Most of us will use stock scanners or screeners. Social media, a lot of people use, that's how, Wall Street bets came about. That's how this whole GameStop thing started, through social media. So that's a good place people go. They look on Twitter, stock tweets, Reddit. I put this in here, Reddit, Wall Street bets, and chat rooms. A lot of times you're learning a strategy from somebody, like everybody that comes in here in this community. They're learning what I do, so they're getting the stocks that they're going to trade from my scan, from my process. But those are ways that you could that you find stocks to trade. It's not rocket science. So, at one time or another, you may have heard both terms stock scanner and stock screener. And you probably assume they were the same. And there's some people that teach they are the same. There's no difference. But technically they are. They're used interchangeably most of the times. But again, I'm an engineer, so I've got to be technical. And technically, there are some differences. Okay, stock screeners were the first generation stock finders, such as FinViz. They were basic, had limited ability, and you would typically use it the night before. And that's what I used to use when I first started. I was taught you scan the night before, you look for stocks that maybe setting up the next day. And so I used FinViz. It was free, and I think there's still a free version. But it will give you dead information. And now it's actually giving you live information. Now it's running aftermarket, it's running pre-market now. For I think those of you that have the elite version. But in the beginning, FinViz was one of those basic screeners. Scanners came along. They're the second generation stock finder, meaning these are programs that actively scan live data and use the parameters that you put in or that the company puts in, and it allows you to filter through all of those stocks and give you stocks that could be potentially worth trading real time. And so when I got that, I started using it, and I started just scanning in the morning for my day trades. So I used to get frustrated when I worked at night and had all of this going, and only 2 or 3 stocks actually did something. So this helped me to pick stocks out that are actually moving that morning, that are making noise, and I had the best chance of making money on it. So that's the difference. Technically, those are the differences between a screener and a scanner. A screener is dead information, and a scanner is going to scan live information. All right, so this is my basic anatomy of a trade. Remember, I keep things simple. I scan, then I plan, then I execute, and I finish. So when we're scanning, we're looking for patterns or the story behind stocks that would kind of put them in play. All right, so that's what we're looking for, and that's all we're going to talk about today. So I use Trade Ideas, which is the basic version. And the ones that I use, let's see. Let me make this I got my thing covered up. All right, the ones that I use are the upward earnings today. And these are just the scanners in the morning. This is how I find stocks to trade that day, to start my morning out with. I use the upward earnings today. That's a Trade Ideas proprietary scanner. I use the downward earnings today, which is the Trade Ideas proprietary scanner. I use the ORB pre-market scanner. That's mine. That's the one that I made. That's what I use to find stocks that's going to give me the best opportunity to make money in the market that day. So I love earnings. Earnings are my number one catalyst. And honestly, my opening range strategy is not supposed to be used with anything other than earnings trades. Even though I try and I use them with other things like I'm not supposed to. But earnings are it for me. And typically, if I can get a stock on earnings, it's going to give me opportunities throughout the day. So I use that scan. Now I wanted to show you a live scan. I wanted to go back and use the historical feature, but I realize now that Trade Ideas has blocked it from me. They are trying so hard to get me to buy the new stuff. I'm still paying the same price I did back in 2013, 2014 when I first started with Trade Ideas. They were trying to get people to sign up. The prices were extremely cheap. Now, the monthly price is twice as much as what I paid. The yearly subscription is twice as much as what I pay. I don't give a damn. I'm not going to change. All right? All I need is those basic scanners. I don't need any of that other stuff. But it's kind of a battle that we've been going back and forth on for like a couple of years now. But I just use the basic scanner, and I'll just go through what I have on it. If you're a member, I give you my layout. I send you my layout. But if you're not a member, I'm gonna tell you what I use to filter up here. The price, I'm looking for stocks between 15 and 300 bucks. I typically stick to 25 to 300. But we have traders in the room that like to trade lower price stocks, so I let it run. I think $5 is the lowest I've got on the scan now. But for me personally, I'm only looking for stocks between 25 and 300 bucks. Lately, 50 to $250 has been kind of the sweet spot. But I'm not the type person that will go in and look for $2 or $3 stocks that I could trade 10,000 shares on and try to get 20 cents or 30 cents or whatever. That's not how I trade, because as quick as you can get to 30 cents, you can lose 30 cents. And I can deal with it if I'm in 300 shares or 500 shares. But if I'm in 10,000 shares and it goes against me 30 cents, I'm going to be sick. So I can't deal with that. So I think I can make, and I've proven that I can make decent money whenever I'm executing like I'm supposed to. Trading smaller size. And I'm showing you how to grow your account. If you have a small account, you can only trade with so much size. I'm showing you how you can do it. I'm looking for volume over 50K. Trade it pre-market. If it's under 50K, it won't hit my scan, which is that. And these two, I'm looking for change from the close. The dollar amount, I don't care about the percentage. For me, it's just $1. It needs to have got up or down at least $1. That's going to make my watch. Now, yeah, there are stocks that don't make my watch, that haven't gapped up by the time I do my watch list. But by the time it opens, we've got the gap, we've got the volume, and it actually makes good moves. That's great. But for me, I have to stick to everything hitting by 9 o'clock. That's just my process. Now, if I don't have anything, then yeah, I'll float some of these that are marginal. But I won't trade it if it doesn't meet my criteria by the time the market opens. But for the most part, we're sticking to this. The float needs to be between 50 million and 1 billion. Anything more tends to not move the way I like. Anything less tends to be really, really scary. The lower float stocks could trade thin and could really be stressful. So I like to keep the float. Even 50 million is a low float. But I can deal with those stocks better than I can deal with a 2 million or a 10 million float stock. We got the short float percentage. I don't typically pay attention to that. so much, but it's up there to give me that information. I look at what sector. Now this is a deviation, standard deviation, and this tells me how many days it's been up or down. So has the stock been trending up the last couple of days? Has it been trending down? That's what that tells me. How many days. But I look at the sector because there's certain sectors that I don't trade. Like I don't like to trade the oil and gas sector. Those tend to turn a lot faster, and they're really too volatile. Anything could change. It used to be the financial sectors, but now the financials are pretty stable. So I will trade those. But the energy sector, the precious metals and stuff, I typically stay away from. And it's a personal thing because I just can't be comfortable in that. Average true range, which is here, I like it to be over $1. And I've got to add the RSI. I want to put it on a scan so that I can see it, just like the ATR. I just been lazy and haven't done it. But I check it at the next step anyway. So these are the stocks that are going to show up on my ORB pre-market scan. And typically I only get, maybe 10, 15 stocks. Now the first quarter, man, the damn stock was, the scanner was maxed. I mean, it would be maxed out every day. So I would have to, it'd take a lot of work to try to figure out what stocks I wanted to trade. I would have to quickly filter out a lot of the stocks that were too cheap and had other stuff that, other people wanted me to have on that scanner. But most of the time it gives me exactly the stocks I need. But just because it hits my scan doesn't mean it makes my watch list. You have to vet the stocks. So the vetting process is I pull it up on FinViz. I look at the chart, the daily chart, because I like the way FinViz has their ascending and descending lines already put in. And they're really damn accurate. Okay, they're pretty damn accurate. So I use these to help determine how much potential I've got, how much profit potential I've got, and is it caught like this stock, Mattel, is caught in between this channel here, the ascending resistance and the ascending support. Here's another mistake I made on choosing Mattel to trade, which really got me to believe that, hey, I was trying to trade that because I was just trying to get some money back. You can see there's not a whole lot of room between where the stock opened and the top of this ascending resistance. So really the measured potential was somewhat limited already. I was already kind of limited on this. And so when it opened and it ran up, when I got in, it was damn near on top of this. So there was no reason I should. That's the mistake I made. And this is the reason why you have to vet these stocks. And I convinced myself to put it on my watch list when I shouldn't have. And that's why it's hard. When you get under pressure and you're focusing on the wrong things, these are the mistakes that you make. So this was a prime example. But I use FinViz. I do a quick check for the news and other data, which is this chart. Here's the news that I look for. Here's the other data. I would just look at on here the RSI. I would look at how much the average daily volume is. And this gives you pre-market data. starting at 8 o'clock, I think. At 8 o'clock, it starts giving you pre-market data. If you have the elite, if you're paying for the subscription, it's worth it to me. You know, being that this is my profession, it's worth it. It's just a cost of doing business. But it tells me everything I need to know. And whether we have analysts upgrade, downgrade, or whatever, and when it was, what the particulars are, and the news is down here. So it's cut off a little bit. But you can see, this is where I see what news dropped today that could affect it other than the earnings. Because sometimes you have a stock that announces earnings, but then they announce a merger too. Or they announce their earnings and then they announce a secondary offer. And I need to know that because that's going to affect the way the stock moves. And if it's a merger or if it's on earnings, I'm not touching it. It's not going to make the watch list. And then over here, you've got people that are commenting. I think this comes from stock tweets. Most of it is people that have no clue what the hell they're doing. But as I thought about the GameStop thing, if I had paid attention to what these guys were saying, I probably would have made more money. But like I said, that's a once-in-a-lifetime thing. So that's why FinViz is so important. I use FinViz for my swing trading scans because I don't need live scans for it. And it's important in my swing trading. But this is where FinViz fits into my day trading and why I pay to get the elite subscription. All right, then I use my Thinkorswim charts to look for the measured potential or the value in each stock by marking the daily pivots, moving averages, and any other potential support or resistance from the daily chart. Now, the reason why I like Thinkorswim is because it allows me, when I draw the line on the daily chart, it automatically puts it on all of my other charts. So I don't have to draw 2 and 3 times like I would have to do on DOS. Some people told me there's a way to do it, but I haven't figured it out. And what people have sent me hasn't worked. So, you know, it's just crazy. But I like this. This is the charts that I grew up on, so to speak. It's the first thing I had. And for a free charting system, this was amazing. It's very powerful. And I use it not so much to trade off of, but to show me the levels. And these are the levels that I take and I mark on my DOS chart that you see streaming in chat every day. Now, we go through this every morning between 8:30 and 9 o'clock. We go through this. And you're seeing me vet the stocks. You watch me mark the levels, and I go through my decision-making process. And you guys ask me questions about stocks that you like, why I don't like them, all of this stuff. But that's what makes this, so good. Why are they blowing my freaking phone up, man? Oh, let me turn this off. But you get to see it. And those of you that come in at 9:15, 9:20 just to see the watch list, you may not understand how I got that and why this stock isn't on and that stock isn't on and all of that. But it's a process that you have to develop going forward. It's a process that, is intimate and unique to you. You learn from other people and the things that they look for and the things that are important to them. but you have to come up with your own way. What makes sense for you, what feels natural to you, what works for you. And that's what I've done. And that's why I could care less what anybody else says. I make money doing what I'm doing, and I'm going to keep doing it. And if something in the process of me doing reflection and all of that shows itself as, this might be a better way of doing it, and you could be more efficient this way, I'm going to test it, and I'll implement it once it proves to me that it works. But there's a process to changing and going through all of this as well. We talk about all of that, in a lot of the classes and things that we do. It's all about process. So I explained it step by step, but it's really, really simple. I know it looks involved, but it's really simple. The reason why it seemed that way is because I explained every little detail. But once you set the scanner up, you don't have to worry about this anymore. Stocks hit it. You put it up, pull the chart up on FinViz, look at it. Look to see what they've got on this. Any upgrades, what news is out. Then we pull it up on the chart. We go through it. We mark the levels together. A lot of times the levels are already there. They're already there, so we don't have to worry about it anymore. We can just verify. The only thing I have to change sometimes is the daily levels because they move from day to day. But if I've already been through and I've already marked the daily levels, you don't have to do it anymore. Matter of fact, I can end the show now. This is how my scanner looks in the morning. It's filled up. This is just showing you what stocks are moving pre-market. Window dressing. These are the two earnings scanners I use. These are the ones that are telling you which ones are moving today that has earnings tomorrow. But this is the scan. This is the one, the goose that laid the golden egg is this right here. That's what I use. But unfortunately, I can't it won't allow me to do the historical thing today. But this is a better snapshot of the charts that I use and I go through. You can blow it up and all of that good stuff. But that's going to do it, man. That is going to do it. So hopefully that helped you out. You understand it's a simple process. Just takes a minute for me to explain it. And if you have any questions, just shoot me an email. ed@AverageJoeTrader.com. So you guys enjoy the rest of your weekend. And some of you guys I'll see tomorrow morning for our session. If not, I'll see you Monday morning. We'll get back at this thing bright and early.